Welcome back. You're still tuned into Buy Now, Sell Now, and let's kickstart taking all your stock-related queries onto the show. And viewers, if you want to connect with us, you can connect live on the WhatsApp number that is flashing on the screen, and throughout the show, will flash on the top of the screen. You tell us your name, the stock that you have invested in or wish to invest in. Tell us the quantity and the time horizon you wish to stay invested in. We'll try to take as many queries as possible indeed. But with this, let me welcome two of our very special guests on the show today. We are being joined by Kunal Bothra to guide us technically as well as on the fundamental side. We are being joined by Rajesh Agarwal. A very good morning, gentlemen, and thank you so much for your time. A lot of queries already started trickling in, and the first query that I have, let me take it from you, Rajesh. First of all, very good morning. This query is coming from N. Ramesh. He's a senior citizen and holding shares of IGL. He's holding 100 shares. Buy price is close to 540 rupees. Yes, indeed, given the news flow recently, Mr. Ramesh is at a loss. But what's the outlook, Rajesh? Would you advise to stay invested in this one or look for any other company? If you are advising to switch, then he's also seeking some options.
Good morning, Srishti. Good morning, Shyamshi. Good morning, Kunal. As far as IGL is concerned, I think one should continue to hold for a longer term horizon. In the short term, there might be some blips or some amount of consolidation because of the news flow with the cut in their gas supply, and that's going to add to their cost. But what I believe is going forward, they're going to pass on these added costs to the consumer itself in the long run. So yes, the margins would be in pressure in the shorter term, but going forward, I think these things should be taken care of if one is ready to hold for a long term. I don't find any reason to book losses at this point of time because whatever negative was there has been discounted in the price, and one can continue to hold. And by any chance it falls by another 5 to 10%, one can even add to that.
That's a take coming in as far as IGL is concerned. Kunal, I'm going to come to you with the next one because we do have an investor, Rohan from Pune, who's written to us actually about PCBL. 500 shares at a buy price of 505, looking to stay invested for the longer term. What kind of targets can he expect when it comes to PCBL then?
See, first of all, good morning to all of you. I'm very bullish on PCBL, Philip Carbon, and I think the last quarter move for the stock was just an indication that the stock can come back into a very strong momentum-driven and volume-backed rally for itself. Now, in the last 2-3 months, of course, on the back of the overall market correction, even this stock had corrected from I think around 550-60 levels to sub 400 mark. That was a very classical opportunity for you to average it out. Since you purchased at 500 thereabouts where the current price is for the stock, I would suggest to hold on to the stock, and in case if it happens that in the next maybe couple of weeks or months, if there's a second round of volatility into the stock price, I would suggest to even add further. My targets for the stock over the next 3 to 4 quarters, which means at least 12 months plus, placed closer to 700-750 mark for PCBL.
All right, that's the take coming in on PCBL. But Kunal, the next query is on Dixon Tech. The stock has been on a roller coaster ride. Yes, indeed, one way upwards. And a viewer named Sri has been holding 20 shares and his buy price is 17,400. And given the up move, what to do next, Kunal? Would you advise to sell, hold, or even go ahead and accumulate more?
So not to accumulate more, but just hold on to the existing lot which you have. Now, one of the concern is that you've purchased at 17,000 mark. The stock is at 19,000 levels. There is a very strong possibility that the stock may come back to that or try to hit that level of 20,000 or thereabouts, say over the next 1 week or so, if this market remains to be more into a consolidative mode. But sooner or later, looking at the last 1 week, 1 month, 3 month of price rally, I would believe that the stock may come back into an overbought territory. So your strategy should be, as of now, to hold on to the stock, but then keep a watch in case if there is any kind of a signal of a reversal into the stock price. I would suggest to book out profits over there at that point of time, and then try to look to re-enter once the stock comes back to that 17,000 mark, which is your initial buy price.
All right, then that's the take coming in as far as Dixon Tech is concerned. The next one, Rajesh, is coming in from Bala from Coimbatore, holding Ujjivan Small Finance Bank at a buy price of 35 shares at a buy price of 2,002. He's saying, I believe there's a mistake with the kind of buy price that he's quoted, but he's holding Ujjivan Small Finance Bank, wants to know if he should hold on for 1 to 2 years. What do you have in mind when it comes to this one?
See, when we look at the entire small finance bank sector or the microfinance bank sector, this entire sector is reeling under bad assets. problems of rising NPAs and all the write-offs and all. So it's better to switch to a full-fledged bank, maybe a Bank of Maharashtra or a UCO Bank in the smaller space or larger space. You have a likes of HDFC Bank or Kotak Bank, which can give you a stable and consistent return. So it's better to switch. I would say sell on rise kind of strategy to be adopted.
All right, that's take on Ujjivan Small Finance Bank and some of the alternatives also given by Rajesh. But the next query, Kunal, is coming in from Nikhil Sharma. He wants your advice on Infosys. He's holding 10 shares at a price of 1794 rupees. What to do with this particular stock? Go ahead and book out some profits.
So maybe keep a trailing stop loss because the stock still looks quite okay on the charts. The only missing part for Infosys when we look at this is the zing in momentum, because the stock has gone through a very slow gradual rally. So there could be two things which could be happening, that if in case the IT stocks get into a zone of consolidation, Infosys may come back into a corrective phase. But if the IT stocks see maybe one more leg of up move, then there is a higher chance that maybe Infosys can break out the 2000 barrier and then come back into a high momentum zone. So in whichever case, since you purchased at lower levels, you're sitting on good profits, I would suggest to keep a trailing stop loss, say closer to 1920, 1950 could be a range for closing stop loss for your investments on Infosys.
Alright, and that's a take coming in as far as Infosys is concerned. Rajesh, the next one that I have is coming in from Ramki from Delhi. Wants to know about TCS as well as Infosys. She's saying that she's exited all of them at the lowest levels based on the opinion that she's gotten, but she seems to be making a mistake is what she has in mind when it comes to Infosys as well as TCS. What do you have in mind for these two counters then?
I think both are a buy for a long-term portfolio, considering the fact that they have strong balance sheets, the order flows has been good. And with the kind of rate cuts which we have been witnessing in the last 2-3 Fed meets, I think discretionary spends is going to go up in the coming future. And with Trump taking over, I think things are going to improve going forward. And these companies having strong balance sheet give you consistent return that are good stocks for long term. One can buy both of them.
All right, that's the take coming in on the IT names. But the next query that I have, let me take it from you, Rajesh. There's a viewer who didn't mention his name, but he says that he's holding Samvardhana Motherson, 102 shares, and his buy price is 160 rupees. Can he go ahead and add more at current market price? And will that be a good hold maybe for the next 6 to 12 months, if you can advise him?
See, despite being a very good company, it has not been doing anything on the bourses, but the numbers have been improving. Orders from the class 4 trucks have been improving. International business is growing. They have acquired some companies. I think it's a very good company for a long-term hold. One can even add to that.
Alright, so that's a take coming in as far as that particular stock is concerned. The next one I have is coming in from Keval from Ahmedabad, Kunal, and he's seeking advice about UPL. In fact, he has 117 shares that he's accumulated between May 2023 to October 2023 at an average price of 618 rupees per share. Now he's being offered 14 shares under the rights issue. He wants to know what he should do.
Well, I think you should apply for that, because my belief is that maybe the worst part of the trend for UPL, that I think that is over, because the stock in 2021-22 had made a high of 800 levels. The recent of the stock was around 450 mark. I think that was start of 2024 if I'm not wrong. And now the stock seems to be coming back and retesting levels of 600 time and again, even though of course it's failed into getting that momentum breakout. But with the fact that the stock is trying to reattempt a breakout the trend line resistance or a major psychological resistance, eventually the breakout would happen for UPL. So I think it's a good time where you should look to accumulate further. My expectation is that once the trend resumes and the breakout confirms for UPL, you could be looking at the stock coming back to that 750-800 point. That could probably happen in the next 12 to 18 months.
All right, that's the take coming in on UPL. But the next query that I have, Rajesh, let me take it from you. This one is from Dr. Zeenat from Ranchi, and she wants to invest in Castrol India and restaurants brand Asia. But she's looking to invest maybe for the medium term. Would you advise, do you like any of the names amongst these, or any other stock that you would like to recommend?
We have been recommending Castrol since a very long time. I believe it was around 125, 130, around 12 months back. And we still believe that with a strong balance sheet, the kind of move they are making into EV space and all, uh, the kind of brand they have into lubricants, it's still undervalued with a strong balance sheet with a lot of cash into it. They can give good dividends. One can even add Castrol at this point of time. As far as the restaurant brand is concerned, I think it's for a short-term play. There may be a movement for trading opportunities, but for investment, I would say avoid.
Right, so that answers Dr. Zeenat Kausar's query coming in on that particular counter. But moving on, then we also have Sudarshan writing to us. Kunal wants to know about Bharti Airtel option call of 1,640. What do you have in mind when it comes to this one?
So I think it could be a good strategy, a bit of a contra strategy. But if you're looking to initiate this today, then I think it could be a good strategy because it looks like that the stock after this 3-day, 4-day upswing of 100 points from 1580 to 1680 is coming back into a retracement mode. So buying the dip generally is a good strategy because the risk reward typically tends to be in your favor. So I would suggest that it's a good strategy which you can go for 1640 call option for Bharti Airtel. The risk reward is what you have to design, but I would believe that 1600 on closing basis could be a good support for the stock in the very near term.
All right, that's the take coming in on Bharti Airtel. But the next query, Kunal, that we have is coming in from Revant. He's a short-term swing trader, is what he's saying. He has two queries for you. One of them is GE Shipping. He's holding over 900 shares and his average price is 1110 rupees. He wants to know the target maybe for the next 3 to 6 months. And he also has Bharat Forge over close to 700 shares. Buy price is 1375 rupees. Here two target for 3 to 6 months.
See, I think GE Shipping actually is a bit of a weak chart because the stock is now on the verge of a break below its major support levels. I think the recent support in the month of September, October for the stock was around the 1050, 1040 levels. And it's now currently poised at 1060, which means it's on the verge of a breakdown. I would suggest to look at having a stop loss at play over here because in case of this 1040-50 level is broken, you might see potentially a fall of another 50 to 80 points at least in the very near term, and that could be at least in the time frame of the next 1 to 2 months. For Bharat Forge, I would suggest to hold on because my belief is that the stock looks extremely attractive. The risk reward is placed at in favor for Bharat Forge. And this 1375 level which you've purchased, I think that could probably be taken out in the next few weeks. On the upside, since you have a time frame of 3+ months, I would look out for 1450 to 1500 as a potential target range for Bharat Forge.
Alright, and that's the take coming in as far as Bharat Forge is concerned. Time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Let's continue taking all of your stock related queries. And the next one that we actually have, Kunal, is coming in from RK Swati. Wants to know if you have any entry points then in mind for Granules for a 2-year time frame.
See, I think the recent news flow for the stock has kept the stock a lot more busy and volatile. If you're looking to buy, there are two specific styles which you can look out for in terms of entry points. If you're looking at it, at this as a confirmation of a breakout that the stock has finally ended this 3-4 months of a major choppiness in terms of range, then I think closer to 612 could be a breakout point for Granules. That's about those levels is where you should look to buy. But if you're someone who's looking out to buy the stock when it gets into a corrective phase and then trying to take advantage where the risk reward is very attractive for you, then I would believe closer to 525, 550 range could be an excellent range for you to accumulate Granules. So these are the two ranges which you can keep an eye on.
All right, moving on then. And the next query that I have is coming in on KPIT Tech. And Rajesh, if you can help Mr. Padmaseva Rao, and he on KPIT Tech, he wants to know, is this a good buy even at current levels?
Yes, of course, it's a good buy. Doing very well, at least on the auto side. They are having good client base, good order book. I think this type of correction is an opportunity for long-term investors to accumulate. If you're a long-term investor looking for investment of around 12 to 18 months, yes, it's a good buy.
Right, thanks for that take coming in. In fact, we also have another investor, Dr. Singh, who's a senior citizen, writing to us from Delhi, holding 40 shares of Hero MotoCorp, Kunal, at a buy price of 3,410 rupees. Should he continue to stay invested or book profits at this point?
See, I would advise to hold on to the stock since your purchase price is at 3,800 levels. Had it been on the higher side, then probably the view could have been different. The only concern for Hero MotoCorp and many of the other auto stocks is that they are going through a phase of I would sense in a prolonged phase of a pause as well as a consolidation. So the correction what you've seen for Hero MotoCorp is almost more than 20-25% from the highs of 6,200 plus mark for the stock towards a point when the stock has breached the 4,500 levels also. So my expectation is that potentially this trend on the downside as well as the drag would continue. But whenever these auto stocks make a comeback, if that happens in the next 2-3 months or after a period of 2-3 months, I would believe that stocks like Hero MotoCorp would be amongst the first ones to make a very strong and a ferocious comeback. So the strategy is as of now to hold, but in case if it comes closer to your cost price of 3,800, 4,000 levels, I would even suggest to add or accumulate further.
All right, that's the take on a couple of these auto names. But the next query that I have is coming in on Tata Steel. And Kunal, if you can advise Arnab Banerjee from Kolkata with his investment in Tata Steel, 1,600 shares, buy price close to 151 rupees. Good to hold for the long term or exit?
So good to hold on as of now. I'm not sure about long term for the stock because as of now, over the last one and a half odd year, we've seen the correlation breaking for Tata Steel with respect to many of the other metal counters. So I think it's just that the stock has been a huge drag as well as an underperformer when you look at this over the last 2-3 years of the price trends for many of these auto stock metal stocks which have come back into breakout mode in every time zone where the metal stocks have rallied. Now, since your buy price is at 150 thereabouts for the stock and it's closer to those 147, 148 levels as of now, I would suggest to hold on. Maybe potentially you can keep a swing target of 165, 160, 165 for Tata Steel. If it enters into that level, you can either go for a book profit over there or you can have a trailing stop loss mechanism where you can keep your cost price as your trailing stop loss and continue to hold on.
Well, absolutely. So that's the take coming in. As far as Tata Steel is concerned, Rajesh, I'm going to come to you with the next one because OSN Reddy has written to us from Hyderabad specifically for you. Wants to know about Asian Paints 28 shares at a buy price of 2,828 rupees. What do you have in mind when it comes to this one?
See, the numbers have been very bad, I would say. This quarter numbers were below expectation, below anybody's expectation. It was very poor, and I don't believe that has going to be anything improvement in number in the near future. Just because of the fact that crude was rolling at around $70-$75, and at that range, if Asian Paints is showing poor results, that is a matter of concern. And not to forget the kind of competition that's coming up in paint sector, be it JSW, be it Grasim, be it Estelle, everybody is coming out with paint. The competition is going to be hot. So getting good returns in this stock in the near future seems to be difficult. So it's better to switch from Asian Paints to maybe some other large cap like a Reliance or HDFC Bank or Larsen would be a better option at this point of time.
All right, that's the take on a couple of these paint counters. But Kunal, the next query is coming in from Vivek. He wants to know the entry price for Coal India, where he's looking for a swing trade.
Well, I think only about levels of 430, 428, 430 is where you should look to buy Coal India. Because the stock still seems to be into a drag mode. The swing breakout point for Coal India, where it breaks past about a confirmation of a major resistance, I think it's around the 428 mark. So maybe a half a percentage point higher from those levels. 430 is where I would suggest you to look for a swing trade on Coal India.
All right, so that's the suggestion coming in. As far as the swing trade on Coal India is concerned, tell you what, Rajesh, I'm going to come to you with the next one because Jay Krishnan is writing to us from Kerala, wants to know about NTPC, buy price 425, invested for the medium term, what should he do? He's in fact asking if he should actually be shifting to Ultratech cement instead of NTPC. What do you have in mind?
See, that's a difficult one, I would say, because both of them are good companies. While NTPC has one of the largest power capacity, I would say, in the country. On the other hand, Ultratech has the largest cement capacity, and both are doing very well. So I don't think it would be prudent to sell NTPC and buy Ultratech, although I have a buy recommendation on Ultratech. If you have extra cash or extra capital with you, you can always buy Ultratech. But switching from NTPC to Ultratech won't be suggested. Stay put with NTPC.
Stay put with NTPC. That's the advice coming in from Rajesh. But with this, it's once again time to slip into a very short break, viewers. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. Then, in keeping with the same, the next query that I have, Kunal, is coming in on NTPC. All right, we have already addressed Jay Krishnan queries. I'm switching to the next one, and the next query is actually a fundamental as well as a technical query, wherein SK Saran wants a view on Wipro. So Kunal, let me just start with you. He's holding over 650 shares. He didn't share the buy price of this counter, but how is the technical setup looking like for this counter?
See, for a change, it's looking quite positive for Wipro because the stock has been an underperformer. It's been playing with a lot of news flow for itself every now and then. So there have been periods where the stock had been one of the better performers in the large cap IT space, but then all of a sudden there comes an abrupt news flow in the stock, or the trends get halted for the stock and it remains sideways corrective phase for a period of 3-6 months. But I think it seems like that finally that's behind the stock price. This consistency the stock has shown over the last 5-6 months, and more of a very stable uptrend indicates this that this trend is here to sustain as well as build for Wipro. My expectation is that over the next 12 to 18 months, I would look out for targets in the range of 350, 340 to 370, 75 thereabouts for Wipro. So I would suggest a hold.
All right, so that's a whole recommendation coming in from Kunal. Rajesh, what is your take when it comes to Wipro then?
See, Wipro, despite being a very good company, the recent acquisition of today's new company is going to bolster their application business. It has done nothing on the bourses, I would say. It's a highly underperformed. But for long-term horizon, I think 15% upside from the current market price in the next 1 year is quite possible. But again, I would like to add that there are better choices in the IT space as such, be it Infosys or TCS in the large cap names. Or in the second rung, you have HCL Tech or a Persistent, which can give better return than what Wipro could.
All right, so that's a take coming in as far as Wipro is concerned, and a combination view at that. So let's take it forward with the next query that we have, in fact, coming in from Vishal. Kunal, he's writing to us about Equitas Small Finance Bank. 600 shares is what he's holding on to. Buy price is 99 rupees. What do you have in mind when it comes to this one then?
Yeah, it's been an underperforming stock for the last 3 or 4 quarters straight. I think from 100, 105 towards the point when the stock has corrected to 60, 64 rupees. But it looks like that maybe the worst could be behind into the stock price. So I think rather than selling at current levels, I would suggest to hold on to the stock.
All right, with this, would like to thank Kunal as well as Rajesh for taking the time out and helping all our viewers resolve their stock related queries.
If you like this video, then like, share and subscribe to ET Now.